So I have some breaking news. If you hold any cryptocurrency, especially we're going to be taking a look at Ethereum and Bitcoin. So I highly suggest you stay until the very end and please consider giving this video a thumbs up. So what we can see here on a technical level is cryptocurrencies have seen a massive correction this past week and the past several weeks. And this has happened because of the Fed, interest rates, inflation, recessionary fears. All of these things are pushing cryptocurrencies down. And it is not a beautiful thing for traditional markets overall. Ethereum has seen a pretty significant correction because it was the best performing coin through the crash. It was one of the best performing coins. It performed very well, over 120 something percent from the bottom to the top of $2,000. But Ethereum right now is forming a bearish pattern in my opinion, but we could be getting some bullish relief here very soon. But what I personally am thinking of is Ethereum and most cryptocurrencies, to be completely honest with you, are in a downtrend. We are in a downtrend. This downtrend can actually play out to be bullish, but let me share with you what exactly is happening other than the immediate short term. So on a macro scale here, we can see the resistance level that is downward sloping. And that can actually be bullish, surprisingly or not. We take these support levels over here, and what we're getting here is a descending wedge pattern, which typically end up playing out to become a bullish reversal. So Ethereum is still significantly higher from the bottom of $800, where we're currently sitting at $1,300. So we're still significantly higher than where we were. Ethereum right now, Ethereum and Bitcoin, kind of the same thing. They're kind of doing the same thing here, are holding up after this crash that we have experienced this week. And it was not beautiful. The traditional markets are crashing. We have the S&P. Look at this, guys. The S&P is seeing lows that we have not seen since June 2022. That is not a beautiful sight, to be honest with you. If we break this support level with the S&P 500, that will signal a massive crash in the traditional markets and most likely the crypto markets as well, for the most part, just based on following that cryptos follow the traditional markets. If we do get a double bottom here, we will see some short-term bullish relief in the crypto markets as well. So that's going to be very interesting. But let's go ahead and dive into the charts. Let's see what's really happening. And let me take off these trend lines and just let me confirm with you. Let me show you. We are heading down. We are heading down. This is the resistance level. This downward sloping resistance level is being respected and being created from this top and this lower high here. And they're most likely going to continue to be respected whether we come up here and pump. It is very likely that we will get rejected here and continue the downtrend, especially considering what's happening economically around the world, considering the recessionary fears, considering the traditional markets. But is this the end of the world? No, because cryptocurrencies, although they are bearish and we are in a bear market, although we are in these scenarios and situations, there are great opportunities to make money, even more so money. You can make more money in these types of markets than bullish markets, because when things are just pumping every single day, they go up so much, right? But when things are crashing and dropping and then bouncing up very quickly every single day, moving 10% up, 10% down every single day, that's a lot more money and volatility to capture versus the 10 or the 20% you will see Ethereum and certain cryptocurrencies perform each and every month. So when you're getting these massive swings down, guess what happens? There's big bounces that take place. Every single quick drop, there's always a bounce. Always a bounce. And these bounces, they add up. Look at this bounce here. From here to there, that is nearly, what is it? A 10% bounce. These bounces are adding up quickly. Another 10% bounce. And this has happened several times this week. These 10% bounces, these are crazy. But the best times to buy, in my opinion, the best times to trade are when things seem the scariest. When things crash down 10%, 8%, 12 to 15%. And it looks like it's going to go down another 20 or 30%. That's usually, honestly, the best time to buy. That's when people are most fearful, and that's usually when the market bottoms out and bounces, at least in the short term. So right now, the market is in a downtrend, but there are incredible trading opportunities. If you know how to capture them, if you set your stop losses, if you take advantage of this opportunity, you can make more money, acquire more cryptocurrency in these types of markets than you can in a bullish market, in my opinion. Let me know if you agree with that in the comments below, because you can additionally, when you understand the overall macro trend here is bearish, that we are heading down, you can short over on Bybit and make money while things are crashing and going down. You can do so with the link in my video description where you can claim up to a $5,000 deposit bonus. So in my opinion, we are bearish. We are bearish. There's not much right here in the immediate short term, not much data that can push us up. Will we get some short-term relief? Will we bounce up? Will we go up here? Yes, I do believe that in the short term, but we're most likely still, whether we bounce up another 10 or 20 or 30% here, whatever it is, I do believe we're going to keep getting rejected until these traditional markets can actually start to recover and bottom out, which is going to be hard right now. It's going to be hard within the next 30 days, in my opinion, for the traditional markets to recover way back up here, to break resistance levels, considering that the Fed is going to continue to raise interest rates. But the Fed has already laid out their plan that they're going to stop raising interest rates eventually in a couple of years from now, and that they're going to stop raising interest rates as high as what they're doing now. So these could be a couple of things that will maybe potentially pump and push up the markets, as people know that the Fed is not going to be raising rates aggressively as they have been doing so far, unless the data causes them to do so otherwise. So currently right now, the market is bearish. We are headed down, but there is short-term opportunities to make money by shorting the market, catching some of these small bounces with proper stop losses. But remember, nothing in this video is financial advice, just my own opinion. Now, if you want to get access to the most profitable crypto trailers on the internet, go ahead and join the Patreon, especially tier 3, where you'll get access to all the alerts and to be a part of the crypto trading group. That's going to be it for this video. Please consider giving this video a thumbs up, subscribe with notifications on, and I will see you all later.